G'day everyone, welcome back to Pete's Investing. Today's April 26, 2023. This is the S&P500 US market update. So what we've got here on the daily here, the weekly and the hourly. So let's first look at, what we're looking at, I primarily want to make sure all three timelines, or the weekly and the daily at least, are in a same alignment in terms of going long or short. And at the moment, our indicator down here is showing a neutral positioning, which means we don't go long or short. It's undecided at the moment. So let's drill down on each. This is the weekly. You can see here the moving average 60 of the price chart and the moving average 3 and moving average 5 are all in up positioning, but they're weakening. The CCI 150 with a moving average 5 and the moving average 50 is also crossing over and weakening as well. So that's turning into a potential bearish movement, as indicated by the indicator down here, which combines both those two moving averages of the price chart and the CCI. At the moment, it's neutral on the weekly. On the daily, it's also neutral on that indicator, and you can see there clearly the moving averages of both the price chart and the CCI are in decline and potentially going to turn and break to the downside of that moving average 50 of the CCI. And if I drill out, you'll see here. You can see here more clearly the support at 38.31 and the resistance at 41.93. And I've also drawn this diagonal descending trend line, and it looks like it's going to be coming down and resting on that. It actually did bounce off. The wick did bounce off that descending trend line, but I think primarily we expect it to actually probably break through there the way it's going at the moment. The market is weakening. So at the moment, avoid taking long or short trades until we see a more comprehensive break to the downside, and we see either the weekly and at least the daily break to the downside like it did back here. On the hourly, there was a pretty significant move overnight, and it broke further to the downside, and you can see there it came in almost rested on that descending diagonal trend line. It's already broken through that ascending line, so that's where we are in that typical area. Now, in terms of price movement, Fibonacci's, let's draw a Fibonacci retracement between, let's go back to that low and that high. You can see there it's resting now on the 23% Fibonacci retracement level. So a key area of concern will be if it breaks below the 61%. If it comes down past here, that's going to definitely confirm a bearish outlook. But the price could punch through any of these Fibonacci retracements, and it can also bounce off any one of those. It can even bounce off the 23% where it is at the moment. So before we take any further action or take any trades, I'd suggest wait until we see, on the daily at least, a break and showing a bullish movement or even a bearish movement to the downside. At the moment, the weekly movement looks like it's weakening, and it may well be breaking to the downside in the coming days and possibly weeks. So to understand how to properly trade using the average down approach, reference the links in the description below. Subscribe and support us and like us on Patreon. Thanks for watching, and see you in a future video.